Hello and welcome to ASML's Q4 and full year 2024 results video. Let me start by welcoming Christophe and Roger. If I can start with you, Roger, can you give us an overview of Q4 and full year 2024 results?
Absolutely, Jim. So Q4 net sales came in at 9.3 billion, which is a bit higher than we guided, primarily driven by install base business, which came in at 2.1 billion. So that was quite a bit higher than we guided. For the full year, we're looking at 28.3 billion of revenue, again higher than last year, and primarily driven, I would say, by the install base business, which in total came at 6.5 billion, which is about 16% growth in comparison to 2023. Gross margin for the quarter came in at 51.7%, again ahead of guidance, primarily because of additional upgrade business that we were able to record in the fourth quarter. And also because, as you know, we have the revenue recognition for the first High-NA tools. So we had two High-NA tools we were able to recognize revenue for in the quarter because the customer accepted the two tools. And that is, recognizing High-NA revenue, as you know, is detrimental to the gross margin. But in fact, the cost that we needed to incur in order to make the systems work were actually lower than planned. So that was also one of the reasons why the gross margin for the quarter came in a bit better than we anticipated. Gross margin for the year, 51.3%, which is similar to the gross margin that we had in 2023. If you look at net income for the quarter, 2.7 billion euros. For the full year, 7.6 billion euros in terms of total net income. Net system bookings for the quarter, 7.1 billion euros, of which 3 billion EUV, and that got us to a backlog for at the end of the year of approximately 36 billion. Talking about net bookings, the net bookings, and we said this before, net bookings can be lumpy, particularly if you look at it from one quarter to the other. And in fact, the way we do it, the way we work with our customers, and the way we come up with our expectations for the business, really is based on on an ongoing review cycle that we have with customers. So it's much less influenced, I would say, by bookings. It's much more based on regular reviews that we have with customers. So recognizing that that PO bookings can be lumpy and are not necessarily, we would say, a good reflection or accurate reflection of the business momentum. We said we'll continue to provide a number throughout this year, but after this year we will stop providing this number. What we will do is provide a backlog. So on an annual basis, we will provide you with the total backlog.
So all that said, how would you summarize Q4 and the full year in 24?
Well, Q4 was a record quarter for ASML. 2024 is, yet again a growth year, and therefore yet again from a revenue perspective a record year for ASML. And I would say recognizing in the current very dynamic market circumstances, recognizing that we once again had a record quarter and a record year. I think kudos and a big thank you to the entire ASML family, both the employees and all the partners that we have within ASML to make that possible within this very dynamic environment.
If I can turn to you, Christophe, can you give us an outlook on 2025, how you see things?
Well, I think our outlook remains consistent with the view we gave last quarter. We see total revenue for 2025 between 30 and 35 billion euro, and the gross margin between 51 and 53%. AI is the clear driver. I think we started to see that last year. In fact, at this point, we really believe that AI is creating a shift in the market. And we have seen customers benefiting for it very strongly, other maybe a bit less. So for AI, if the demand remains strong and our customers are capable to build some capacity, we see the opportunity toward the highest part of the range. On the other hand, there's still quite some uncertainty on the other customer, and this also justifies the lowest part of the range.
If we look then at the different market segments, logic, memory, install base, how do you see that progressing through 25?
So 2024 was strong for memory, and we expect memory to remain strong. We expect logic to grow to basically fulfill the demand of AI.
And what about install base?
Well, our number of systems in the install base continue to grow. We see an increased share of EUV as well, and we expect some more upgrades next year. So overall, we will see also an increase in our install base business.
If we look then maybe at a topic that's on everybody's mind a lot of the time is China. How do you see China revenue progressing in 25 versus 23, 24, for example?
Well, we had a lot of discussion about China in 2023, 2024, because our revenue in China was extremely high. I think we have explained that this was caused by the fact that we are still working on some backlog created in 2022 when our capacity was not big enough to fulfill the whole market. 2025 will be a year where we see China going back to a more normal ratio in our business. So I think we're going to see again numbers people used to see before 23.
If we turn back to you, Roger, we look at 25 in terms of a numbers point of view. How do you see Q1 in terms of guidance?
For Q1, when it comes to net sales, we're looking at guidance between 7.5 billion and 8 billion. Included in there would be 2.1 billion that we expect for installed base business, which would be similar to the last quarter. And we'd be looking at a gross margin somewhere between 52 and 53%.
So if I look at that gross margin in Q1, how should we expect things throughout the full year as a whole? Should we expect the high end of the guidance there?
So gross margin 52 to 53%. If you compare it a little bit to what we had in the last quarter, so where is the uptick from the last quarter? A number of moving parts, most significant moving parts. We do not expect to have revenue recognition for High-NA in this quarter, so that's a positive. On the other hand, also for Q1, there is a little bit less immersion sales in there, which is detrimental to gross margin. So net, we still believe that we're going to have a little bit better gross margin in Q1 than we would have had in Q4. If you look at the full year, again, particularly in light of High-NA and High-NA revenue recognition, we believe that is primarily skewed towards the second half of the year. As a result of that, I would expect that the gross margin in the first half is a little bit better than the gross margin in the second half. Nonetheless, what we said before, the gross margin expectation for the year is between 51 and 53%.
Okay, and do you expect any additional impacts from the latest export control regulations that have been recently published?
Quite a few moving parts when it comes to export controls from the US. As you know, the US articulated a number of new regulations in December. Actually, two big parts there. One was they included a number of new technologies on the list of restricted technologies, and they also added a number of fabs to the list of restricted fabs. So fab, where restrictions apply. You also know that the Dutch government very recently came out with new regulation there as well. But I would say that the combination and the impact of those both US and Dutch measures has been appropriately reflected in the guidance that we've given before. So the 30 to 35 billion properly reflects the limitations that we see from an export controls perspective.
Christophe, if I can switch to our technology, can you give us updates on the latest progress when it comes to low-NA, high-NA, our DUV products as well as applications?
Well, if you look back at 2024, I think this has been a very rich year for technology at ASML. We have started to ship some products that will be very, very critical for our customer volume ramp on AI, but also for their longer-term roadmap. So let me start with EUV low-NA. This is our NXE 3800. We started to ship this system last year, as you know. We have achieved a very important milestone last quarter, which is to demonstrate basically the full capability of the tool, final specification here at ASML. And we are continuing to mature basically the platform with our customers so that the tool can be ready this year to really support high volume manufacturing. As you know as well, on this tool, this will become the majority of our shipment when it comes to low-NA this year. Roger was referring to the margin, this is going to be a good contribution to that. INA, we are very, very happy with our achievement on INA last year. We got the first 2 customer acceptance, which, after so many years of development has been a major milestone. The feedback on the imaging performance from our DRAM customer, logic customer, continue to be very, very positive. They like what they see. And the key discussion now is really when, how, and in which volume, I would say, to insert this tool into volume manufacturing. And that's a discussion we're going to have with our customer. Deep UV, still a lot happening on Deep UV. We have shipped our latest generation on immersion, the NXT 2150. We have shipped the latest generation on KrF, the NXT 870B, which can provide up to 400 wafer per hour speed, which is a major, major step compared to the previous platform. So a lot of good also progress on Deep UV. And finally, I think also a big highlight when it comes to application. You know that we have been working on e-beam product for quite a few years after the HMI acquisition. Multi-beam was a major reason to do this acquisition. And at the end of last year, we got also our first 4 customer acceptance on multi-beam, which is, of course, a major milestone for all of us at ASML.
We ended the year with a significant amount of cash on our balance sheet. Can you give us some more details on what you plan to do in terms of capital allocation going forward?
So you're right, a lot of cash generation in Q4, particularly in the last weeks of the quarter. A lot of cash came in. As you know, we first and foremost use the cash in our business, right, to make sure that the business goes on. And then, as you also know, our policy is to have increasing dividends. So the dividend, the interim payment that we're going to make in this quarter will be 1.52 euros per ordinary share, which is in line with what we had last quarter. The final dividend that we propose to the AGM is 1.84 per ordinary share. So that gets the total dividend for the year to 6.40 per ordinary share, which is about a 5% increase from the year before. So I think you see the continuous improvement and increase in dividend right there. Whatever is left, can be used for share buybacks, and we should continue to see that throughout the planned period.
We've just finished our Investor Day back in November of last year. Can you give us a more long-term outlook of how you see both the market and ASML between now and beyond 25?
Well, I think our view on the long term is still, I would say, very positive. And we used to talk about semiconductor everywhere. I think since November we start to talk about AI everywhere. And we truly believe that AI is going to bring even more opportunity to this semiconductor industry. That's the first thing. The second thing is that AI is going to drive more advanced technology to address some of the challenges on cost, on power consumption. We believe that this will drive more advanced DRAM logic technology, so more appetite for an aggressive roadmap. This is, of course, good for lithography. We also believe that the solution we can provide our customer will secure that lithography remains at the core of the solution they want to use, basically to execute on this very aggressive roadmap. And this is why, as we have said in November, we expect the number of lithography layers to continue to increase on all applications. And to translate that into numbers, I think, again, very consistent to the view we presented in November, total revenue for 2030 will be between 44 and 60 billion euro. Our gross margin will be somewhere between 56 and 60%.
Very clear. Thank you, Christophe, and thank you, Roger.
Pleasure.
Thank you, Jim.
Good morning, everyone, and welcome to this press conference of the Q4 and full year 2024 results at ASML. My name is Monique Mols. I'm responsible for media relations at ASML. You are here at the auditorium in Veldhoven, our headquarters, and we are here to talk you through our numbers, our developments, what we see in the future. We have a couple of journalists here in the room. Welcome. Thank you for traveling to Veldhoven. Very nice to see you. It's always nice to see people in person. But we also have some people that are watching online. And a very warm welcome to those watching from Asia, and a Happy New Year, and hope the Year of the Snake will bring good luck and fortune to you. So thank you very much for joining in this special day. We appreciate the effort you're making. The people online, if you have a question, you can actually use the menu on the website. There's a screen that allows you to fill in your question, submit it to us, and we'll take it after the presentations. And for those who are here, just raise your hand when you have a question later on in the Q&A, and we'll get to you. I'm not going to do the presentation for all the numbers, and I realize I forgot my clicker. Wait a minute. I have some help. We've got the CEO of ASML, Roger Dassen, who will, who loves forward-looking statements. So Roger Dassen will talk you through the numbers, and you've seen him before. And this year, for the first time, our CEO, Christophe Fouquet, will be here to talk you through the development and our progress in 2024. So with that, I'd like to welcome Christophe to the stage. Thank you. And I'll hand this over to you.
Thank you very much, Monique. Good morning, everyone. Roger and I are very happy to welcome all of you here at ASML to spend a bit of time to reflect on 2024, look at what we expect in 2025 and beyond, and of course take some of your questions. So a bit more than a year ago, we defined 2024 as a transition year. And this has definitely been a transition year. And there's a couple of things I will be stressing in my presentation, which were very, very important in 2024. The first one is AI. I think you have all noticed how AI became important for this industry. I think there's not one day without all of you talking about AI, sometimes in very optimistic terms, sometimes more recently in more fearful terms. But AI is definitely a major, major change for this industry, and we'll talk about that. And the second transition, you know that ASML is a technology company. I think you know that our success has come from the fact that we have tried to always stay one step ahead when it comes to technology. And 2024 also has been an important year, a very rich year in technology at ASML, preparing also for this technological transition we are going to see happening starting in 2025 with 2-nanometer logic, but also some of the needs of the AI chips, high bandwidth memory, high power computer. So this has been also a major focus for 2024. Roger, of course, is going to talk about the number, about 24, 25, but I think you already realize that we finished the year very strongly. This is a new record year for ASML. This is a very strong record Q4 quarter. We are very happy, of course, with those results. And I cannot not use this opportunity to thank the entire ASML team everywhere in the world for all the hard work and the commitment basically to help us achieve those numbers. You have noticed also we start 2025 on a good note. Roger will spend some time on that. But again, so far, a pretty good day. So let me go a bit into some of the key trends in this industry. I already mentioned AI. We talked about AI also in our Capital Market Day in November. And what we explain is that in this industry, we used to talk about semiconductor everywhere, right? Because today, any major application requires semiconductor. Today, more and more, we believe that we will be talking about AI everywhere. So semiconductor will be everywhere, but AI will be everywhere too. And the reason for that is that the opportunity that AI represents for the entire economy, for the entire humanity, is huge. And we are just at the beginning of that. What you see today is people starting to invest basically in hyperscale computer in order to develop their product. And those products will come over time to hit our market. And this is really a very, very important change. What you see here also is the number, the impact potentially on the GDP. We talk about trillions of dollars, which is huge. So this will also mean that we can expect over time that a lot of companies will want to play in this field. So I know some of you maybe were surprised in the last few days that a new company suddenly come and want to compete. Well, I think we have to get used to that because this is such an opportunity that there will be more and more players to grab this opportunity. And we also explained in November that for AI to succeed, cost has to go down and energy efficiency has to go down. We also explained that this will come only with innovation. And I can promise you that in our industry, any innovation that has ever reduced cost always created more volume and more opportunity. And again, we will see a lot of that happening, hopefully, in the next few months. So what does it mean for us? AI is going to be everywhere, and everywhere means two things. You will see two types of different products. The very advanced one, the one that we talk about every day, which are going to require very high technology, but also what we call mainstream semiconductor, because you need sensor to feed basically AI with data. And what we see happening on our market is that both the advanced technology segment is growing. We see more and more appetite, in fact, for advanced technology in logic, in DRAM. This is, of course, a good thing for ASML. But we see also a major increase in the volume of semiconductor overhaul. So this is mainstream, so this is a bit less sexy, so people will talk less about it. But this is, of course, a very, very important part of our business. So this will continue to drive our entire portfolio. And as I will explain later, that's also why we are continuing to invest basically in all those technology, advanced one like EUV, less advanced one like Deep UV. If we look at the number, we still talk about $1 trillion opportunity, 2030. There's a lot of debate on how big this could be. Is it bigger than 1 trillion or much bigger? I think we are not really entering into this debate. This is already a big number. We're going to drive that, and of course, our business will scale with whatever this number will scale with. But we're still looking, of course, as a very significant opportunity. The only thing we don't know exactly today is how this is going to happen, right? So we see the investment of everyone in AI. We don't know exactly how this will play out into applications. So when do you start yourself to buy mobile phone with AI, computer with AI, car with AI, etc., etc. So that's the part I think we have to still understand. We're going to watch what's happening this year, next year. And this is why, we are also still, in our case, sometimes people say a bit cautious on the long-term view because we don't have yet all the understanding, again, on how the AI opportunity will really play out in the coming years. Now, this being said, I think you have seen this slide in the past. This is showing basically the EBIT, total EBIT of our ecosystem, all the people that are investing in this industry. This is huge. And this has been growing more than 13% year on year for many, many years. And what does it say? This says that basically this industry has the means to continue to fuel innovation. In fact, you most probably don't have any other industry that has this kind of means to keep driving innovation. So that's why we always show that, because this is still a good news. There is means for innovation, and as you see it here, the return is very good. And people are investing on not only what's happening next year or the year after, they invest for what's going to happen in 5 and 10 years. And as you know, we do the same in ASML, because we have to look basically not only to 2025, we have to look even already at what may happen in the next decade. So this is good news. If I summarize a bit the future, it's bright. We're still very bullish. I think, if anything, AI has strengthened the opportunity for this business. So AI is going to be a key driver starting next year. But on the short term, it's also create a shift. And that's what we have also experienced in 2024. Some of our customers have done extremely well with AI. In fact, so well that they cannot produce enough chips to supply to their customer. And those customers have been driving our own demand, and they will continue to do that in 2025. But you have also seen in 2024 that some of our customers were not doing as well because they were not yet basically on this AI opportunity. And this has created a bit of, this change also of dynamic last year. The second thing, AI has a couple of challenges: cost, energy efficiency. To improve that, innovation is needed. One of the innovation is Moore's law, and we expect an acceleration of Moore's law. We also expect that the market will have a higher product mix towards advanced logic and advanced DRAM. And all of that is good for ASML. All of that will contribute to increase, as we explained in November, the need for the most advanced lithography machine, EUV, Deep UV, and this will contribute to basically increase the size of our business. And this is why when we look at 2030, our expectation in terms of revenue is that we will be somewhere between 44 and 60 billion euro. In terms of gross margin, we are looking at a range of between 56 and 60%. So those are good numbers, again, resulting from this opportunity. Now, you know that I'm an engineer still. I still spend quite some time on technology because technology at the end of the day is what feed our success. This is what prepare basically the opportunity for the next few years. And as I said in my introduction, 2024 has been a great year for technology. We have released many important products on EUV. So we talked quite a bit about the latest low-NA product, the NXE 3800, which provides almost 40% improvement on productivity. That tool was released to customer end of last year. We've been shipping quite a few of those tools. And those systems are now being qualified. They will be a very important part of the ramp of the advanced technology in the next few months. So this is very important. We have demonstrated the full specification at ASML, major step, again, in terms of performance. And we are working now with customers to mature the platform. INA has been a big news. INA is a program that we started in 2014. So you can imagine that when at the end of Q4 we get our first 2 customer acceptance, this is a major validation not only of the value of the technology we bring to the customer, but also of the investment we have made, because this is millions of hours of work, a lot of innovation, and therefore we are very, very happy that the feedback from our customer on INA is positive. They like what they see. And now we're going to work with them to define exactly when, how, and in which extent to introduce INA in the future. But INA is going to complement very nicely low-NA to drive advanced technology manufacturing moving forward. Now we talk always a lot about EUV. Deep UV remains a very, very important product. Most of the wafer today are exposed today with Deep UV. EUV is a very small part of the lithography layers. And you see it here, the number of exposure on Deep UV is going to continue to grow between now and 2030. So there also we need innovation, also because Deep UV being a bit of a older technology, maybe the competition around those products is getting higher. So we're continuing to invest, and here also we come with major innovation on our KrF product line with the first shipment of the NXT 870B, which allow us to get to more than 400 wafer per hour. So giving productivity. Productivity for customer means lower cost. Lower cost means for ASML that the customer will be more willing to work with those tools because they provide a cost advantage. And we have also shipped our latest generation of immersion. So immersion, if you want, is the most advanced Deep UV technology before EUV. There also, the NXT 2150 was shipped to an advanced DRAM customer, opening the era for, again, higher performance, higher productivity also on this tool. Finally, if you remember, a few years ago, we started our application business, our holistic lithography business. We make still a lot of progress there. We grow the size of this business every year. If you look at the YieldStar install base, we have more than 1,000 systems right now in the field, which is, of course, very significant. But the one thing I'd like to focus a bit more today is e-beam. If you remember, we acquired HMI a few years ago, a Taiwanese company doing e-beam. And the reason for that was to bring fast e-beam technology to the market, what we call multi-beam. And this year, the other big news, I would say, on technology, together with the first customer acceptance for INA product, was the first customer acceptance of our multi-beam product by several customers, which is, again, a validation of the technology, the investment, but also the need moving forward of this tool. So you are mostly a bit less familiar with this, but these are also some of the very important technology, important product we are developing for our customer. And we are also very happy to achieve good results on that last year. Now, we have to prepare the future with just more than technology. People is a strong focus in ASML. I think that, when Roger and I look at the assets of the company, I think people always come first because they are capable year after year to create all those technological miracles in R&D, but also bring them to customer and make sure that customer can really use them in high volume manufacturing. So investing in people remains absolutely a priority for ASML. And we do it differently than we did it in the past because we have a long-term view. We invest, I would say, earlier. So what you see here are a few examples. We are getting more and more intern in ASML. So we are opening the doors of ASML to students as early as possible so that they get an idea a bit of what we are doing. And that, we make sure that ASML is high on their list when it comes to choose their next job. We have been focusing on diversity. We will continue to focus on diversity. We are very happy that over time the percentage of women in the company has grown. It has been growing every year for the last 10 years. It continues to grow. And in order to do that, we have to work very early on the pipeline. So we have to go basically also to school, university, to make sure that right there, women also find an interest in ASML. ASML used to be seen as a company that is a bit rough and you only have guys, engineers working there. I think this image is changing. For good reason, because this is, of course, a very open, very interesting place to be for anyone. And finally, we're reaching out to university. A lot of you, at least the local journalists, are very much aware of the cooperation we have with the TU University in Eindhoven, many other universities in the Netherlands, but we're also extending that basically to a very global network of university. There also, it's a way to invest in the future, and I would say a way to support, in a broader term, the entire industry, because you understand that not all those students will come to ASML, but they may end up supporting our customer, our suppliers, etc., and that's also very important. So more and more focus paid on that. I think this is really, really a key element of attention for the leadership in ASML in the recent years. Extension. We are going, I want to show you the number for 2030. This is clearly calling to growth in people, growth in capacity. And as you know, we are a global company. We have a very strong presence in the Netherlands, of course, where we have the core of R&D, the core of our manufacturing. But we also have activity in the US, elsewhere in Europe, Germany, for example, and in Asia. And as we grow our business, those places will grow with us. So you will see, if you drove around for some of you this morning, you see that there's still a lot of construction happening here in the campus. You know about our plan of the second campus in Eindhoven, but this also extends again to other parts of the world. And this is in preparation to support basically our growth. So still a lot of activity here. When we look at our ESG sustainability agenda, I think we started very early on to drive this agenda, long before we had CSRD and all those regulations coming our way. The reason for that is because we believe this was the right things to do. We believe it was important to reduce our energy consumption, reduce our impact on our environment through some of the logistic activity we have. We believe, I said it already, that our people are at the core of ASML success. So we developed basically a lot of activity to make sure they feel well in ASML. And I think that we continue in terms of governance to have, the ambition to be a leader in this industry. So we want to lead by example. So to give you a few examples on environment, we have reduced our EUV consumption per wafer by more than 54% since the first EUV machine, which is enormous. And we're still working to get another 40% off in the next few years. So we are actively making sure that the amount of energy we need on the EUV machine to expose the wafer goes down. We become a bit brave. We shipped our first Deep UV system on a boat, which, I can tell you 10 years ago was out of the question in ASML. But we are learning how to do things differently and create new opportunity. And we shipped our first Deep UV tool, our first YieldStar system as well. And in the future, we plan to do a lot more than that in coordination with our customer, supplier, etc. On social, so we have a lot of activity with the community. We are very proud of that. More than 57 projects and more coming. We're spending time on housing, on infrastructure project, of course here in Brentport, but not only. Everywhere we have a strong presence. We believe this is important to do that. And we're also very happy that our employees are contributing themselves. So we have a strong gift matching program, which is getting also quite some success among our employees. And we are very thankful that they do that. We skip governance. We get pretty high score on sustainability. I think I'm more hot on what we do than the score we get. But I think the rest of the industry is also recognizing a bit this effort. One last thing to end, because I think it's important. This is about, again, the community. I talked about housing. We try to do more to really, I would say, improve the experience of the people around us. We had many discussions about growth, and one of the things Roger and I believe, the rest of the leadership believe, is that we want to grow, but we never want to be a burden for the community. And in order to do that, you have to find the right balance and, of course, proactively contribute to make sure that housing, school, infrastructure are available. That, of course, discussions that require strong support from local and global government, so we have those discussions as well, but that remains important. Education, STEM, we start very early. That's why you see a picture of very young kids. We believe that you have to start as early as possible to explain, children why this is a great world, why this is a positive world, why ASML, why this industry is positively contributing to society, to humanity. We help also people who are working on other ESG innovation, locally again, but also beyond that. And, you may have seen in our social media also this year, we have quite some activity when it comes to employee giving. So we talked about the gift matching program, but we have also a lot of people volunteering basically every day, many hours in order to engage with the community. So this is a bit who we are today. Roger is going to now give you a view of the number. It's also exciting. So with no further delay, I'd like to introduce Roger.
Thank you, Christophe. It's good to hear the CEO say that numbers are exciting, and they are, and that's what we wanted what we want to share with you. So, Christophe said it. If we look at Q4, the fourth quarter, it was a very strong quarter, and it was a very strong quarter. It was a quarter where I think the company really ran on all cylinders. It was a strong quarter based on the top line. So if you look at net sales, it was a record quarter for ASML, exceeding our guidance from that vantage point. It was a very strong quarter from a gross margin perspective, particularly helped by the fact that we had very strong installed base business. So that was one of the reasons why revenue was up, but it was also an important driver of the gross margin. It was a very strong quarter because we had a very strong order intake of 7.1 billion, which is a very good start, I think, for this year. And it's a very strong quarter because we had very significant cash generation in Q4, if only to make the CFO very happy. So, all in all, I think it's a quarter that ticked all the boxes. And it was a quarter that indeed meant that we could end 2024 as a really strong, as a strong year. If you look at what we said at the beginning of the year, we said, and Christophe made reference to a transition year, we said we expect the business to be approximately similar to what we had in 2023. And indeed, we were able to get a little bit better than 2023 with a top line of 28.3 billion, gross margin of 51.3%, also a little bit better than what we expected at the beginning of the year. Strong net income, as you see here, 7.6 billion, an earnings per share of 19.25 euros. And we were able to return 3 billion to shareholders, either through dividends or share buybacks. We'll come back to that in a moment. So all in all, I think a pretty strong picture for 2024, and more or less in line, and actually a little bit better than what we anticipated at the beginning of the year. If you look at the different businesses, and already Christophe highlighted some of the key elements in there. If you look at the numbers for EUV sales, a little bit down, 9% down to 8.3 billion, with 44 EUV systems, both NXE and EXE. But also there, it was a transition year. It was a transition year because we did introduce, after 10 years, as Christophe explained, after 10 years of working on High-NA, we were able to get the first High-NA tool really to the customer, get it installed at the customer, and get a customer to accept the tool. So I think that was an important part of the transition. We were able to bring the 3800 into the field and indeed get customers excited about that tool as well. That is a tool that really drives the performance of EUV Low-NA to the next level. We used to look at an EUV tool with 160 wafers per hour. This one in final configuration gets you to 220 wafers per hour. So also that, I think, is the biggest step that we made in EUV since the inception in terms of improvement of productivity. So from that vantage point, being able to bring that one into the field, I think, is a major step as well. So EUV, a little bit down in terms of total business, but really a transition year that is positioning us very well for the future. DUV grow a bit, 4% as you see here, and also there we introduced important new products into the market with the 2150, Christophe showed it, and the 870B, the KrF system on the NXT platform. Major multi-breakthroughs from a technology perspective there. Application grew very nicely with 20%, both YieldStar and multi-beam in particular, contributing to that growth. And there, I think, and Christophe again mentioned that the fact that we were able to get sign-off from multiple customers on multi-beam, again, a project that we've been working on for many, many years, I think is a milestone for the company. And finally, installed base growing very, very strongly at 16%, and this is both on the service side and also on the upgrade side. So all in all, as I mentioned, 2024, quite in line with what we expected at the beginning of the year, and actually exceeding that a little bit. If we then move to the composition of our sales, a few things that immediately you will recognize. Immersion, very, very strong. You saw that in the growth number for DUV, but clearly driven by the immersion business, making up for 44% of our system sales. Also clear that memory is very strong, and there I think the importance of high bandwidth memory to make AI work, I think, is clearly recognized, and I think that filtered through also in the order. So memory, quite well recovered, I would say, from 2023. If you look at the regional mix, obviously the thing that catches your eye is China. China very strong at 41%. already quite strong, I would say, in 2023 at 29%. You know the story, we've said it before, all the way through 2022, our order fill rate for China was quite low. We had an order fill rate for China of around 40%, so we could only give to China 40% of what they were asking for. So as a result of that, the backlog for China had been filled all the way through 2022 massively. And what you see here is that in 23 and 24, with the capacity expansions that we've been carrying through, we were able to execute on that historically built up backlog. As we mentioned before, we do expect that on a going forward basis, China will go back to more normal percentages of our business, and that means lower 20%, is what we expect them to contribute to our sales this year, and that is commensurate with the representation of China in our backlog today. So those are just some of the headlines if you look at the composition of our net sales. I think this gives you a similar picture. Again, it shows very clearly the strength of the memory business which has been nicely building up, I would say, over the past couple of years, but a real spike this year, given the significance of high bandwidth memory for AI. This gives you the full P&L, if you like, for the consolidated statements of operation. And again, as I mentioned before, I think very much in line with 2023. So most of the numbers are quite comparable. Although you would see that on the R&D side, we keep on pushing the pedal to the metal, right? So it's very clear that with all the projects that we have, with the R&D pipeline that we have, with the very strong ambitions that we have also in the medium to long term, and the good ideas that we have, we keep on investing in R&D, because I think that is something that we will be able to very firmly capitalize on in the years to come. In terms of net bookings, I just want to highlight that, because net bookings has captured the headlines in a few quarters last year, and not always in a positive way. But just if you look at it from an annual perspective, if you put all those quarters together, you see it wasn't too shabby, was it? I mean, you're looking at an order intake for 2024 more or less on par with the order intake that we had in 2023. So, as we mentioned at the beginning of the year, quite in line with what we had in 2023. A bit of growth, and the fact that we were able to sustain the gross margin in spite of the fact that we had the first High-NA tools recognized, I think is a strong achievement. Cash return to shareholders. What we propose to the AGM is to declare a total dividend of 6.40 euros per ordinary share. That would be a 5% increase over the total dividend for 2023. And I think that's very much in line with the policy that we have, a policy of growing dividends, and whatever cash remains after we've used the cash in the business, whatever excess cash is there, and after distribution of dividend will be used in terms of share buybacks. Share buybacks this year fairly low in comparison to some of the previous years. As you see it here, we bought back shares for approximately 500 million. And that is related to what I mentioned a bit earlier. Q4 was very, very strong in terms of cash generation, but it really made up more than 90%, I think, of the total cash generation for the year. So the cash came in quite late. So at the end of the year, we're actually looking at a very high cash balance. But as a result of that, we chose not to do too much share buybacks in 2024. In terms of outlook, so starting with the quarter, starting with Q1 2025, we expect net sales between 7.5 billion and 8 billion euros. Installed base at 2.1 billion is what we expect for the first quarter, which is on par with the very strong installed base sales that we already showed in Q4. Gross margin for this first quarter between 52% and 53%, a little bit higher than the guidance, or narrower if you want to define it in that way, than the guidance that you see there for the full year. That is also related to the fact that in Q1 we will not see revenue recognition for High-NA. So High-NA will be more skewed towards the second half of the year as a result of that, a slightly better gross margin in Q1. R&D approximately at the level that we saw for last quarter, and SG&A I think well managed, even a little bit below the level that we had in last quarter. And then for the full year, we're looking at total net sales between 30 and 35 billion. So this is in line with what we discussed in Q3. A gross margin between 51 and 53%. So you do see a good increase there in comparison to previous years, and an annualized effective tax rate of around 17%. So that is the guidance that we have provided at Q3, and that we're reiterating in actually today. So I would say all in all a very strong start of the year. Typically, what you would see is a very strong Q4, a not so strong Q1. I think what you just saw was a pretty strong Q4, pretty strong Q1. So I think that's good momentum. Overall, and looking forward a little bit beyond 2025, what do we expect? And I think Christophe gave you the foundational comments for how we look at the business. What is very important, and you saw that also in the R&D number, we continue to invest in R&D in a big way. So the roadmap that we have is quite broad and quite deep, and we do believe that it sets us up for capturing the opportunities that the markets provide. The market, as we see it, and as many people see it, the market by 2030 it could be a semiconductor market that could exceed $1 trillion. So very significant growth in comparison to where we are today. And obviously, as Christophe said, AI is a very important driver of that growth. And we believe we are well positioned to, with our products, capture the opportunities that such a growing semiconductor market actually provides. And in the Capital Markets Day, we talk quite a bit about our roadmap there and about how we see a very significant share of ASML and an increasing share of ASML in the fabs of our customers, both on the logic side and particularly also on the DRAM side. In terms of what that pans out, how that pans out and what that leads to, reiterating the numbers that Christophe just gave you as well. So we see growth scenarios leading to a market in 2030 for us, or a business for us by 2030, somewhere between 44 billion and 60 billion, and a gross margin between 56 and 60%. I would say both, good upticks from where we are today. And finally, reiterating our capital allocation and financing policy, which hasn't changed. So again, what we need for the business, we actually use in the business. And you saw some of the projects that we're driving. So we have the R&D efforts, but also the CapEx efforts that were very visible and tangible on the slide that Christophe presented. We have a policy of growing dividends, and then whatever remains will be shared with our shareholders by means of share buyback. So that's the longer-term perspective. I think it's looking bright, and it's fueled by many of the dynamics that in the market that Christophe talked about, and many of the very strong ideas and projects and products that we have on our roadmap. And with that, I would like to hand it back over again to Monique.
Yep.
Who's going to
So you can
grill us on Q&A?
Yeah, just stay here.
There you go.
And I'd like to invite Christophe as well for some Q&As. We are getting questions in online, so continue to submit those if you're watching. Just a small reminder, we are only taking questions from journalists. So it is a media conference, and the conference call for analysts will be later today at 3 o'clock. I see a lot of hands going up, and Mark has the microphone, so Mark, can you
make a choice?
Start there? Yeah, with Max Smolka. Can you say your name first and your publication so everyone knows who you are?
Sure. Thank you very much. It's Klaus Max Smolka of German newspaper Frankfurter Allgemeine Zeitung. The elephant in the room this week is DeepSeek. What is your expectation? What's the effect of DeepSeek-like technology on ASML, and in particular, is DeepSeek technology going to jeopardize your sales in terms of the most advanced high technology machines? Thank you.
Yeah, Christophe.
Yeah, so I think a lot of this question in the last couple of days. So So first, I'd like to say we're not model experts, so I don't have a strong opinion on how good or bad is the new model. So I'll leave that part aside. From a more general point of view, we believe that AI success, AI expansion, has two main challenges moving forward. Cost. Say differently, today AI is too expensive to be able to be rolled out to many, many applications, and power consumption. And in order for AI to be everywhere, we need to see major progress on cost and energy consumption. That's the first thing. The second thing is, if you look at this industry, lowering cost has always contributed to more volume. Right? This is basically the fundamental of Moore's law. Moore's law is about reducing cost every single generation so that you create more opportunity. So I will say in general that any technology, whatever it is, that will contribute into a cost reduction overall of AI will increase the opportunity. This has been true in this industry for the last 40, 60 years. I think it's still true moving forward. That's the first thing. So if you ask me, for us, anyone that lower cost is in fact a good news for ASML, because lower cost means AI can be used in more application. More application mean more chips, and we are in the business of providing equipment to people who make chips. So that's the first thing. The second thing also mentioned, AI is a huge opportunity. Therefore, I think, you should expect to see a few elephants in the rooms in the next few months or few years, because everyone will want to be in. And I think the competition, especially when it comes to software, because I think this is where the threshold to access is the lowest, will be very high. So you cannot have an industry with this amount of opportunity without the key player being, I would say, challenge. So I think you will see a lot more of those discussions happening in the next few months or years. So I think it's a good news, if I make it short. Again, I don't know exactly what DeepSeek can or cannot do, but I said again, anything that will drive costs down is a good news for ASML on the long term.
Yep. Thank you, Christophe. Kim, here, Wall Street Journal.
Kim McCrail from the Wall Street Journal. Another DeepSeek question, sorry about that. I'm wondering, over recent years, export controls to China and to particular fabs have been tightened. Does DeepSeek say anything to you about the effectiveness of those controls? What impact do you think controls have had on DeepSeek, or on the ability to do something like that? Thanks.
Yeah, I think that any answer on that would be quite speculative. So I think I don't know. Again, there's a lot of opinion being given on, how this relates to export control. I think it's hard to say. I think you look at, we talk about software, we talk about algorithm, we talk about people working to develop better algorithm than other. I think you're still pretty high at the surface of AI, if you know what I mean. I think the software part, the algorithm part, will be the most open field, most probably moving forward. So I will not draw any conclusion. I think you will see a lot of people trying to do that. I think, of course, the topic being emotional, this is also a reason for that. But I don't know, to be honest. I think that will be highly speculative.
Yeah. Okay, let's return to, I see you. Let's return to a question online. From Le Monde.
Must be for you.
Yeah, it's no. What about the Beethoven plan of the government? Is everything okay with the promised investments, and will ASML stay definitely in the Netherlands? I think that's also a question, especially, there's some speculation and some chat in the news about France. So maybe you want to address that first, and then we go to Beethoven.
Well, I think we've been very clear many times, and I'm going to try to be clear again, but this is the place we want to be. And this is the place we want to be because we have developed our infrastructure, R&D, manufacturing here in Veldhoven. We believe that keeping those two close is very important for success. So we want to continue to grow here, around Veldhoven, and this is why we had this basically agreement to look for a second campus, and we are finalizing that. So we want to be here. I cannot be more clear than that. I think we are working as a result with the different parties to make Beethoven, our second campus, a success. We are deeply involved. I think we have developed good working relationship with the municipality, but also with the Dutch government, because some of the things we need require attention. And, you know, of course, it's a bit of work, but we need, as a country, as a region, to be able to do that, because, of course, we are competing with many other places in the world where this doesn't sound like a big deal at all. So I think we have to believe that we can do that. I'm convinced we can do that, and so far the progress is good. I think Roger can say a few more words because he's involved deeply on almost a weekly basis to track the progress. But I think the intention and the ambition are remaining very, very strong. I don't know, Roger, if you want to...
Yeah, sure, we can say a few words on progress, because obviously there are challenges, right? I mean, if it's about nitrogen deposition, or it's about the grid, or it's about the execution power in municipalities, which recently drew some attention, and it's all true. But what is very, very clear is that there is a very strong commitment of our government, and government at very different levels. You know, be it at the national level, or be it at the local or regional level. There is a very strong commitment to making this happen. So, you know, that is what works for us. And then at the end of the day, this is collaboration, and at the end of the day, making sure that the right resources are working on the right projects and getting stuff done in time. And you know, we have all the confidence that the things will be executed in time, such that we can execute on the expansion as we have planned.
Okay, thank you. John Koch had a question from Bloomberg. Thank you. Hi, John.
Does this work? Can you hear me?
No.
Hello?
Yeah,
Perfect. Two questions. One on DeepSeek. Well, the news on Monday sent tech stocks into a tailspin, especially Nvidia, but also ASML's market cap fell by more than $20 billion on Monday. So was this overblown, this reaction, do you think? And what's your kind of response to investors who question the need to spend billions on advanced chips and hardware on AI? And then the second question is, last week, Dutch Prime Minister Dick Schoof said that he expects the Trump administration to keep pushing the Netherlands for more export controls on ASML sales to China. What else can we expect on export controls this year? Do you expect sales of your older DUV machines to be affected?
Do you want to start, Roger?
Should I start the second one, and then I go back to DeepSeek? You want to?
Okay. Yeah. On the second one, in terms of export controls, John, we're not gonna speculate on that. I mean, let's be clear. Export controls is not new. It's something that we've been living for many years, and I think, in a good collaboration with governments, have been able to work it, and we'll just see what's going to happen there. There is enough speculation. We're not going to add to the speculation there. I would make one comment on DeepSeek, and then I'll give it to Christophe. We're not second guessing the market. I mean, the market does what it wants to do. But if you read the analyst reports on the tech stocks, I think there is a increasing voice that echoes what Christophe said, which is, at the end of the day, if you make it cheaper and if you make it more accessible, if you make it more energy efficient, it can lead to a democratization of AI in a way that is necessary in order for this to become prevalent. And that's what you see now in most of the analyst reports that I see. That is what is being echoed there.
Yeah, and I think what we do on AI, or try to do that also in November, this is a long-term trend, long-term opportunity. And when it comes to this topic, we always invite everyone to look at the long term. I think on the short term, we explain that. So for us, for example, this created a major shift on the market. And this was not all good, as you have seen last year. I mean, some of our customers really struggled with the fact that this huge opportunity was coming. It was changing the game of the market, and not all of them did well, as you noticed. And we also say, I said that in my presentation, today we don't know exactly how AI will build itself, right? So, there will be a lot of new players coming in, I don't think that you can define today who is the winner in 2030. I think there will be a lot of competition because I said again, the opportunity is huge. And to amplify Roger, we welcome in many ways that competition because this will go against cost, which will increase the opportunity, and it will go in favor of innovation. So I think the challenge is to be able to project yourself, now try to dream up what's happening in the next 5 years. And like I say, you will get a lot of those discussions. Because I don't think that DeepSeek is the last company that say, hey, this is a great opportunity, I'd like to be in. It's not like everyone is going to sit and say, well, you know, we declare the winner today, they are X, B, whatever. No, people are going to fight for the opportunity, and I think it's a good thing. And, well, now, the question is always when it comes to market, you look at short versus long term. We run a business, we look at the long term because this is where the success, the opportunity is.
Thank you. Toby, Reuters.
Hi, Toby from Reuters. I'm not sure, is there a logical contradiction there if you say it's good if the prices come down, but it's also good if there's huge demand for lots of AI chips. So I'm just not sure if it makes complete logical sense what you say, that lower prices will drive better volumes. For ASML in any case, maybe it's a wash, right? Second question, I wanted to ask you had a great comment I think 3 months ago when you said that outside of AI the chip market looks pretty sad, and I'm wondering whether you see any change there with the rest of the market.
Yeah, so on the first one, on the cost relation to volume, let me try to put a bit of color on that. Today, the level of AI sales is pretty high, but most of it goes to hyperscale computer servers. If you look at the number of chips related to that, it's pretty small, in fact. All right, this is not the majority of chips. If it stays like this, then you only have people spending money in R&D to develop models, but you don't have, which is a big question in AI, you don't have the application that basically create the return on this investment. So what we expect to come over the years is those applications. And those applications most probably will end up on a phone, on a car, in industrial application. You see a lot of new expectation on robotics, for example. That's one new area. Of course, on PC, etc., on what we call also edge AI. Today, those chips are not yet in demand. We believe that when it comes to the size of our business, the demand will come more from the use of AI than the research on AI. Right? That's why, and to get those chips, if you want to have an AI chips on your phone, the cost of those chips has to be a fraction of what maybe the hyperscaler can pay for it. You cannot afford a 25,000 chips on your phone, right? So this has to happen. And when this happens, which we see again most probably in the second half of the end of this decade, then AI will really drive volume. Right? That's the relationship. If the cost doesn't go down, you may continue to sell a few very expensive chips and make a few people very happy, but you will not basically bring this technology to, well, let's say to the mass, and the volume will remain small. Right? So we have to get to that point, and we don't know exactly when and how, but what we expect is most probably this happen between now and the end of the decade.
Toby, it's a classic case of microeconomy, right, where it's all about price sensitivity. And I think anything related to tech in the past has demonstrated to be very, very price sensitive. So to the extent that you're able to drive down cost and prices, it more than compensates for in demand. I think that's what we've seen in the past, and that's the basis why indeed Christophe has been saying, starting last year, cost needs to be driven down in order for AI to be successful.
Yeah, and I think on the second question, Toby, I think what Roger and I went many discussions on that in the last few months. What we really see is, we used to look at when the recovery of the normal business happened. I think today we believe that what's really happening in the market is a real shift. So AI is changing quite a few things, with some of our customers are doing extremely well, some of them having to catch up. We see it changing potentially the roadmap of our customer because they have to develop basically processes that will be more targeting, high power computer or high bandwidth memory. Roger talked about it. So there is a real change. There is a bit of a reorganization of the market, which I think we really started to sense in the second half of last year. And this came with a bit of turbulences. I think this is still happening because everyone is a bit lining up to basically go after this opportunity. So this is quite a big change, to be honest. It affects quite a few part of our business.
Yep.
That's, I think, the way we look at it today.
Exactly. We still have a few minutes, so there were some questions here. Can you start there? Yeah.
Okay.
We'll try to be brief and get to all of you.
Yes, I'm Huub Giesbers for Dutch news agency AMP. And I was wondering, since I hear you mentioning that innovation is so important also for the semiconductor industry to reach volume, is it a bit concerned that the world markets are fragmenting because of trade wars or the threatening of trade wars with the US government mentioning tariffs almost every day, also on semiconductors? And will this in some way impact your long-term long-term outlook?
So I think we can both. So the short answer, I think we've been consistent on that. I think this industry has developed on a very successful open ecosystem. The model where you decouple this ecosystem, where you try to have two, maybe instead of one, makes things more expensive, that's for sure, and slow us down. And I would say this is true almost for any, economical matter. So that I think is still true. Does it necessarily affect the long term? So there you can get more tactical, where you say, well, now if I have two, then that could be more. So there's no clear picture. It depends a bit on how the whole thing evolves. But the biggest impact is on cost and speed of innovation. If you have an open ecosystem, both will be better.
Okay, we need to speed it up a little bit. Bert, and then I'll get to. Sorry, Dan, I'm trying to get to you.
Bert van Dijk, Financiële Dagblad. Just a follow-up question on Toby's question about the other industry than the AI sector. I was just wondering if you could elaborate a little bit on the auto market, on the automotive market and the industry market. Do you see some kind of recovery happening there, or are you talking also about a shift in that industry as well? And the short second question is about the order intake. You're going to stop reporting on that from 2026. I was just wondering, is that because you feel like that the investors are too much focused on that number that leads to swings in your share price, or could you elaborate a bit on why you decided to stop? Because it seems to be a step back in transparency.
So let me take both. On the automotive market, the relevance for us for the automotive market has two angles to it. On the one hand, it is the electrification, and on the other hand, it is ADAS, so autonomous driving or assistance systems.
Yeah, we're counting down quickly.
So those are the two there. I think electrification is clearly in significant parts of the world is not happening as rapidly as was anticipated. I think when it comes to ADAS, it will be heavily dependent on how regulation is going to develop. But there we are more positive, and we do see that ADAS will break through. So yes, I think the automotive market globally right now is going through a bit of a dip with the electrification. I think long term, I think ADAS is still strong. When it comes to the transparency argument on what we're doing, I think at the end of the day, what matters to us is that we give investors the right information and the information that they can take the right decisions on. We give them guidance. We give you guidance every single year. That guidance is based on ongoing conversations with our customers. And we think that that guidance that we provide gives you a better indication of the momentum of our business than providing on a quarterly basis order intake, which we have been saying for quite a while is pretty lumpy. So that's why we think in this case, over the longer term, less is more.
Yeah. Sorry, we have to end this. So if you have any more questions, contact one of the media relations colleagues and we'll get back to you. Thank you for joining. Thank you for coming to Veldhoven. Thank you for joining online. And hope to see you next year. Thank you.